Monday was an important day for the bulls as stocks touched multi-week highs, but was it just a dead cat bounce, as they call it? I'm Jared Blickery, the host of Stocks in Translation, and for those who are wondering about this odd American saying, a dead cat bounce is simply a short or brief market rebound that happens amid a longer downturn. And to be fair, you really don't know it until you see it in the rear-view mirror. But we can do some detective work to make an educated guess, and naturally we start at the scene of the market action. There's no crime here. Does this rally have legs or not? And what we're looking for are small clues that, when you put them together, point towards bullishness. So let's take a look at the market footprints. We have volume and breadth. Those can be key indicators. You want to see broad participation and also higher volume on the breakout, telling you that the pros are in on the action. Investors Business Daily, or IBD, has something they call a follow-through day. You count 4 to 7 days from the most recent market low, and if you get a big update in one of the major indices, and it has to be 1.25% or more, and that happens on higher volume, then that qualifies as a follow-through day. Critically, Monday's rally did not qualify because volume, it was only a fraction of the day before. Now, we talked a little bit about participation, but who's participating exactly? Which sectors are on the move? And is it utilities and healthcare they are leading? That sounds defensive. But Monday's rally was led by Tesla, Palantir, and a bunch of cyclical stocks in technology, retail, and industrials. That adds to the bullish evidence. Now we look for patterns. Are the charts talking? We can look for technical clues. On Monday, the S&P 500 rallied above the 200-day moving average, a key technical indicator, but it stopped short of the January lows, which are arguably more important technically. Sometimes we have a nice price pattern like a double bottom, but it's not necessary, and we don't really have any major patterns to speak of in the indices. Bottom line on the patterns and the technicals in the current context, it is a mixed bag. So we move on and we consider the vibe. Brian Shannon of Alpha Trends likes to say this about bear markets: they either scare you out or they wear you out. And the recent market action and the VIX volatility gauge, that showed some decent fear in the market. And we also saw a little bit of fear in the options market. And then we have investor surveys like the AAII survey, which has been flashing a ton of bearishness over the last few weeks. Survey says, yes, we got some fear, and fear is what bull markets are born out of. So put it together, and unfortunately, there's not a clear signal or answer. We did get quite some participation as measured by volume, but it fell short of that Investors Business Day follow-through day. And there remain some technical hurdles just overhead in the charts. But that doesn't mean that the bounce is over or that we have to go lower. We simply need to do some more detective work as the days and weeks go on. Tune into Stocks in Translation for more jargon-busting deep dives. New episodes on Tuesdays and Thursdays on Yahoo Finance's website or wherever you find your podcasts.
All right, Jared, thanks so much.